Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Friday, the 31st of October. I'm Stephen Carroll in London. Coming up today, strong earnings from Amazon and Apple boost stock market sentiment after a brief pause in the global equity rally. King Charles begins the formal process of removing his brother Andrew's royal title. Plus, with NATO's Arctic footprint expanding, Denmark is raising its military commitment to Greenland. Let's start with a roundup of our top stories. Apple is predicting a surge in sales in the last 3 months of the year from its new iPhones. The tech giant is now expecting revenues to rise by up to 12% over the quarter. The forecast is double what analysts had expected and comes after Apple reported increases in sales and earnings per share that beat estimates in the 3 months to the end of September. That's despite revenues falling almost 4% in China and tariffs costing the company over $1 billion. Nabila Popple is Senior Director for Data and Analytics at IDC.
Apple still maintains a really dominant share of the premium market, and that, they haven't lost hold of that. Of course, certainly competitors are coming up, but I think the biggest competition that Apple sees is certainly in China. But overall, globally, we see really strong growth in the segment that Apple plays, which is the premium, and they've maintained that ASP. We see, year over year ASP growth in iPhone, and I think this is what is going to help drive, and especially next year.
Nabila Popple from IDC speaking there. These results included roughly 2 weeks of iPhone 17 sales, with initial demand appearing strong. Shares in Apple rose by 2.3% in after-hours trading. Meanwhile, Amazon's cloud unit posted the strongest growth rate in almost 3 years. Amazon Web Services reported third quarter revenue of $33 billion, up 20% from a year earlier and above the average estimate. The results eased investor concerns that Amazon was overspending on AI, with shares rising 13% post-market. Overall, sales rose by 13% to over $180 billion, and Amazon expects its shopping chatbot Rufus will help deliver an additional $10 billion in annual sales. China's President Xi Jinping has warned against breaking supply chains in his first public remarks since meeting US President Donald Trump. In a speech to other world leaders at the APEC summit, Xi called for multilateralism and collaboration. Bloomberg TV's Yvonne Mann is at the summit in South Korea.
The message in that speech was China is a defender of the global trading system at a time when America is kind of America first policy. We have seen both sides commit to at least bringing down the temperature for at least another year, right? That 1 year truce certainly is longer than the usual 90 days that we've seen these sort of truces last. So we are seeing here at least some détente. The question is, of course, how long it's going to last.
Mann adds that key questions remain about how the trade truce reached between the two countries is going to be enforced. The climb down in tensions comes as China's factory activity slump worsened in October, reaching its longest decline in more than 9 years. Britain's Prince Andrew has been stripped of his titles and evicted from his royal residence after scrutiny of his relationship with sex offender Jeffrey Epstein. According to a statement from Buckingham Palace, the King's brother will be known as Andrew Mountbatten Windsor as a formal procedure begins to remove his honours. Royal historian George Gross from King's College London says the scandal puts the monarchy in a challenging position.
The royal family remains key parts of charitable organisations working on domestic sexual abuse, all of that kind of thing. So for them to have that and this in the background must be impossibly difficult. And also the public disquiet was very significant on this.
That's Royal historian George Gross. Now, the move follows the publication of a posthumous memoir by one of Epstein's victims, Virginia Roberts Giuffre, containing allegations against Andrew. In the Netherlands, the centrist D66 party looks set to lead the formation of the next government. With 98% of votes counted, D66 is projected to take 26 seats in the 150-seat parliament. Geert Wilders' far-right Freedom Party is expected to get the same number of seats, but its isolation in parliament means it won't have a role in government. That paves the way for D66 leader Rob Jetten to become the next Prime Minister if he succeeds in reaching a coalition deal. Senior economist at ABN AMRO Bank, Jan Paul van der Kerke, spoke to Bloomberg about what the result could mean for the Dutch economy.
That will be a good thing for the Netherlands, I think. We have an economy which has performed quite well, outperformed European peers, but is constrained domestically quite a bit. So a more pragmatic government which can give some policy certainty in the face of international policy uncertainty would be very much welcomed, at least domestically, but also for companies.
Senior economist at ABN AMRO Bank, Jan-Paul de Vanderkerke there, speaking to Bloomberg as Robbie Jetten's cabinet could offer a stark contrast to Geert Wilders' premiership. And the world's major alcohol makers have lost nearly half their value since 2021, a total of $830 billion. A Bloomberg index of the beverage market shows how beer, wine and spirit makers have been left out of the global equity rally. James Wilcock has more.
The hit to alcohol consumption is 4 times the size of what happened after the 2008 financial crash. That's how one analyst described the shift to Bloomberg, and why many in the sector think it's a structural change. There are all sorts of reasons. The COVID pandemic sparked health concerns, weight loss drugs, celebrities going teetotal. Tariffs and inflation have taken a toll. But the crunch is severe, and it has led to job cuts and corporate restructuring as the industry tries to recover from its hangover. In London, James Wilcock, Bloomberg Radio.
Those are your top stories on the markets. The MSCI Asia Pacific Index is trading slightly higher this morning. The Nikkei in Tokyo, though, hit a record high earlier, currently up by 1.9%. The Hang Seng in Hong Kong's down by 1%. European stock futures pointing 3 tenths lower, in fact, for Euro Stoxx 50 futures, and Nasdaq futures 1.1% higher after those results from Apple and Amazon. S&P E-minis are up by 0.6% on Wall Street as well. Well, in a moment, we'll bring you more on those big tech results, plus a special report from the Arctic Circle and efforts being made to beef up defences in Greenland. But speaking of beef, there's another story that I've been reading this morning, and it's from our opinion columnist Howard Chwai-Yuan, who's been writing about the rising price of beef and how it means that people are having to pay more for their premium steaks in restaurants around the world. He's been looking, for example, at the 10% rise that we've seen in prices in London. And looking at the underlying causes, including the shortage of beef farmers, how it's in a profession that's not attracting that many more people to it. One of the people he spoke to said that the number of beef farmers under the age of 35 is 2%. It's also particularly valuable. It's got prestige attached to it as well. And he says that'll continue because you'll get the likes of, tech bros and their finance buddies staying with those restaurants, even if prices do go up. All of it's a great read, but actually the part that struck me most is Howard's defence of him seeing some of the big global economic trends through the prism of food and eating out. He writes that restaurants and food may seem anchored in cultural and social trends, but they are entry points to business ideas and economic processes. Markets like armies march on their stomachs. And I couldn't agree more. I'd also add that Howard does this with a sort of insightful touch that always leaves you with an appetite for more as well. You can read his piece at bloomberg.com/opinion, and we'll put a link to it in our podcast show notes. Let's bring you more details now on some of those big tech earnings. Apple predicting a big sales boost from its newest iPhone in the coming months after some disappointing numbers from their Chinese businesses. Let's bring in our tech editor Vlad Savov for more on this. Vlad, investors seem pretty pleased overall with this update from Apple, shares rising in after hours trading. Is this all just excitement about the new iPhone?
Yeah, the iPhone is always going to be the defining product for Apple's lineup overall. And honestly, the story with it is very positive. The September quarter was challenged by supply chain disruptions, CEO Tim Cook said, and he anticipates growth for the current quarter. And third-party data that we have been able to get a hold of indicates the same thing. The iPhone 17 generation has been very well received. It's a redesign, it's an upgrade, especially for the base model, the most affordable model. And that has resonated with people both in the US and China, the two biggest markets.
Not that I went looking for downsides in these numbers, Vlad, but how much of a concern is the weakness in China, that drop in revenues that we saw?
Well, like I say, it's mostly a blip, but if you do want to look for weakness, it has been on the decline. So over the past 2 years, Apple has only had a single quarter of rising revenue within China. So that is an ongoing challenge, and it has so much to do with the China consumer market in itself and the consumer economy. But again, speaking with Ivan Lam from Counterpoint Research, he told me that you have what he called a perfect storm of triggers for people to upgrade their iPhones now, including all the people who bought one during the COVID pandemic, a looking for an upgrade. And this generation of iPhones is giving them the reason to do that.
Okay, so that's on Apple. Amazon shares also jumping after hours after they reported strong numbers out of their cloud computing division in particular. How did that, I suppose, growth pay off against the amount of money that Amazon's investing in AI?
Right, well, investors seem to like it, and they should. 20% growth when you're the world's biggest cloud computing provider is really substantial. Amazon is trailing the likes of Meta and Google, who have better growth rates. But like I say, it is the biggest. 20% is above what anyone had really anticipated. And it's a very encouraging sign for the market leader. That being said, Amazon is spending incredible amounts of money. It spent a new record in capital expenditures, over $30 billion over that September quarter. And it's anticipating more than $100 billion in capital expenditure for the year. And then saying it will spend even more in 2026.
Okay, so something to watch for there as well. Vlad, this has been a week, though, where we've had most of the big tech names reporting. What sort of conclusions can we draw from what we heard from these names that have been so central to the global equity rally?
Well, I have to keep stressing this capital expenditure number. I need to add up the numbers, but we're talking tens, hundreds of billions of dollars. For a good bit of context, TSMC, which is the world's leading chip maker, spends roughly about $40 billion per year on its capital expenditures. And that's the company that buys the most expensive, the most advanced machinery to make the most advanced chips. And it only requires $40 billion. That's a quarter's worth of spending. Just a little bit less of that is what Meta, Amazon, Microsoft, and Google are putting in at the moment. So the question that still hangs over everything is, when is that going to pay off? But the likes of Microsoft do tell us that they are finding more demand that they're able to fulfill. So at the moment, because there is this AI frenzy that goes from the chip making through the suppliers of cloud computing to businesses wanting to be ready and wanting to have AI capabilities, the demand still is super strong.
Okay, Vlad Savov, our tech editor, thank you very much for joining us. Stay with us. More from Bloomberg Daybreak Europe coming up after this. Now, in Denmark is raising its military commitment to Greenland, which is seen as crucial to security along NATO's expanding Arctic footprint. The efforts are focused on threats coming from Russia. Our Copenhagen reporter Sanna Vass joins me now for more. Sanna, you went to the remote coast of Greenland for this story and met some of the soldiers that are on patrol there. First of all, tell us about this place.
I got the chance to tag along Danish troops to Greenland on multiple occasions, actually. So both on the west coast and east. It was during their biggest ever military exercise there, and they were joined by several NATO allies as well. What I say about Greenland is generally it's unlike anything that soldiers are used to back in Denmark. It's a very harsh environment with mountains, ice, very challenging terrain, unpredictable weather. All the settlements there, they are extremely remote. Infrastructure is very sparse, so there are no roads connecting any settlements in Greenland. So it's very challenging to defend, and it's really what requires that Denmark and NATO allies as well go there to train and to be prepared to protect Greenland in case of a future war with Russia or anyone else for that sake.
Well, let's talk a little bit about what exactly they're doing to prepare for that. What sort of exercises are happening there?
Yeah, so it's all sorts of things. Infantry soldiers training, direct confrontations on the ground, practicing for kind of like dealing with hijackings at sea. Fighter jets were training, refueling in air, so a whole span of things that they're training up there. And of course, at the same time, Denmark's government is also investing a lot of extra money. In fact, they've agreed to spend $7 billion extra in the military in the region. So anything from kind of maritime patrol aircraft to icebreakers and Arctic ships. Their focus has really shifted east So they're investing a lot in their special forces units that are patrolling the northeastern Greenland, and also establishing kind of monitoring stations and radars in East Greenland. And of course, it all comes after Donald Trump. He criticized Denmark for underinvesting in the defense of Greenland and said he wanted to take control of the island. It's very obvious that his comments have really been a wake-up call in Copenhagen, and is a big reason why they are now ramping up their presence there.
And how do people in Greenland feel about this defence ramp-up?
Yeah, it's mixed. Greenlanders, I'd say they're very peaceful people, and there's a strong tradition there kind of wanting the island to be a zone of low tension. It seems Greenland's government is now acknowledging that the security situation has changed, and they're now talking about how a military buildup is actually necessary to keep the island low tension. But many Greenlanders, they're very uneasy about more military presence there. I mean, the defense of Greenland, it is an area that's still controlled by Denmark. So some see this larger military presence as undermining Greenland's push for greater autonomy. Many have also been nervous about US presence because of Trump's very assertive rhetoric. The US didn't take part in the exercise this time around, but even Denmark's military, they have to tread very carefully.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.